No, you are not imagining it. The market right now just doesn't quite add up. Strong prices on one hand, fewer sales on the other, and so many people quietly wondering what is actually going on.
And when we sit down with home sellers and ask how they feel about the market, the most common response is a shrug and I don't really know. Some results look great and others just don't seem to make sense.
And realistically, that is exactly what we're also seeing on the ground.
Yep.
So let's break it down. Throughout April in postcode 3977, there were 124 sales reported. Now that is 36% less sales than April last year.
And in postcode 3910, there were 20 sales, down 42% year on year.
Yet, at the same time, the median house price in 3977 is sitting at $785,000, which is 10% higher than April 2025.
While in 3910, the median is $892,500, up 12%.
You win. But make that make sense. With over a decade of selling in 3977 and the surrounds, I've seen a lot of different market conditions, but one thing has remained consistent, and that is underlying demand. Our area is still relatively affordable. The amenities, they keep improving, and the style of housing, the new builds, are suiting buyers coming to the area perfectly.
And when we look at Langwarrin, or what many like to call leafy Langy, it tends to behave a little differently again. It's tightly held and it sits in a really strong position between Frankston and Cranbourne and offers a lifestyle that buyers constantly come back for. So even when other areas feel a little bit more volatile, Langwarrin tends to just keep moving along nicely.
It really does. Now, if we look ahead, the crystal ball is not exactly clear. There are a lot of external factors at play that none of us actually can control.
Inflation is still a concern, and now we've seen a third consecutive rate rise, which will naturally create a bit of hesitation for buyers.
Now, what is interesting though is the last time, Mel, that the rates were at this level was back in November 2023, and the market did not fall apart. Demand levels helped support pricing.
It wasn't rapid growth, but it wasn't significant decline either.
What does feel different in 2026 though is overall pressure.
Yeah.
Everyday costs like groceries, fuel, just existing is impacting everybody.
Yep. And anyone with a mortgage, that's just another layer to manage. For buyers, ongoing rate rises influence both confidence and borrowing capacity, which means more careful decision making.
So while the market isn't falling over, it is more considered, and that is where strategy becomes vital.
For sellers, it means taking every offer seriously and understanding the cost of your next move, not just the sale price.
If you're sitting there thinking, what does this actually mean for me? That's a very normal place to be. We are happy to talk it through with you without any pressure, just some clarity around your options.